Okay, so this is the property planning available modules video. One of the hardest things people find with the Modano system is just the sheer depth and volume of modules. And it's often quite hard to identify your ideal module. So the purpose of this video is really to try and cover off on the breadth of the types of modules that are available. So it's primarily around awareness as opposed to getting into any one module in detail. So it's all about the breadth of content. The next video gets into a little bit more specific detail around the actual property modules themselves. So, all right, we'll start with the starting model. So the starting model's got modules in it to begin with: income statement, balance sheet, cash flow, GST and corporate tax. The rest of the modules we'll look at are actually all inserted by the insert from web method. It's actually worth noting that the financial statements that are contained within the starting model can have multiple uses. So for example, if you run a property development company in which your construction company is separate from, say, a marketing vehicle, you can duplicate your balance sheet, income statement and cash flow and actually create those multiple sets of financials and then aggregate those as well. So if you're looking to do complex SPV style modeling, you might actually end up reusing some of the financial statements that are already stated within the model. Likewise, you can easily take an income statement and only link in specific types of modules to create things like EBITDA statements and so on. So that's just a little bit on the modules that are within the starting model. Likewise, actually, if you've got dual tax structures, you can duplicate the corporate tax module and start to model that up pretty quickly. The starting model modules are beneficial in the first instance, but they do have multiple benefits once you start looking at slightly more complex corporate structures. Sticking with the financials, we also have upward periodicity financials. So if you're looking for quarterly, semi-annual, annual balance sheet, cash flow, income statement, they're all dedicated modules that you can insert from web as well. Now, the whole backbone of the property planning content is really around the actual property modules. This is where all of the operational analysis sits. What we're going to do here is just give you a run through the different types of modules to reflect the different types of activity. The next video gets into a little bit more specific run through of what the different types and content of those property modules is. So this is really just a broad introduction to the different types. Comprehensive property, as the name suggests, this covers all type of activity from construction projects through development work, internal commissioning, investment acquisitions, revaluations, fair value, rental amounts. Anything that you could want to do with a piece of property analysis is all covered in the comprehensive property. It doesn't have as complex analysis in any one instance, but if you're looking to get an initial piece of analysis up and running, and if you're not sure what will actually happen with the property, so if you're not sure whether it's going to be a develop and hold versus just a clean property development, that module is definitely worth using. Also, for people that are just starting to use the property planning content, the comprehensive property gives you a good outline as to, I guess, the depth of financial statement impacts that you can model pretty easily with the content. Now, starting below this, simple construction projects. These are really just designed around dedicated construction work where you've got a bit of contract recognition, WIP balances, and contract and cost release. So nothing too complex with the actual construction projects themselves. Working our way up, we then also have property developments. So this is where you've got construction work, fair value adjustments, revals. You want to track your WIP balances, and you're looking at really a release and development sales. That's what the property development modules are aimed at, and there's different types for resi, commercial, industrial, and so on. So property development, just a little bit more complexity than the fairly clean construction projects. Now, above the property development, you've then got develop and hold, which, as the name suggests, is development and holding on. So the additional aspects that we've included above the property development modules are things like internal commissioning, as well as rental income incentives and things like that. So all that rental aspect is included. The investment property modules, this is all around acquisition. So, the purchase of an investment property, fair value adjustments. You can still do improvements in there, but it isn't as comprehensive as a true property development piece. And obviously your investment property has the whole rental incentives calculation piece included as well. Those main kind of property models have reasonable rental calculations in there, but over and above those individual properties, we've also got dedicated rental income modules. And these are aimed more at looking at certain versus speculative income, weighted average lease type calculations. So a little bit more kind of whiz bang rental calculations. So that's the universe of the property modules themselves. These are covered in the next video, which gets into a little bit more specific calculation and how to actually use those modules. So definitely worth checking that out. Now, in addition to the kind of property asset style modeling, we've also got fairly comprehensive fixed asset modeling. So for example, we do a lot of car park modeling. Now, when you're looking to model a car park, there's a couple of aspects to it. One is the car park itself as a valuation style asset. And the other relates to things like all of the CCTV, which are more of a fixed asset question with depreciation and that kind of traditional fixed asset style schedule. So what we've got here within the fixed assets are Capex modules, fixed assets, and tax assets. So the Capex module these are really aimed at the detailed schedule of individual assets. By comparison, the fixed asset module is then used for the depreciation calculation. So depreciation calculations are pretty heavy. So sticking with the car park example, say you bought 200 cameras for a large car park, you're not going to calculate the depreciation for each camera individually. You're much more likely to actually bucket them up into accounting policy levels, which obviously differ by years, to say, there is a bucket of CCTV. Let's sweep all 200 individual cameras into that main bucket. So the fixed assets are really aimed around that depreciation piece. And as I say, there is not only fixed assets, but there's also the tax asset side of things. So you can reflect tax written down value rather than net book value. And the corporate tax module then also handles all of the DTAs, DTLs, and so on. So a really kind of wrapped set of modules for fixed assets. Other thing just to note is they also do have WIP assets. So if you are looking at longer term creation of fixed assets with a later commissioning date that then triggers your depreciation, all of that's handled as well. So just look for the WIP assets when you're inserting your fixed assets. Now, kind of sticking with the fixed asset side of things, it is assumed that the Capex is a cash flow in the period in which you enter it. For those people looking to kind of work out the differential in terms of the actual timing of payments, the property planning content also uses all of Modano's main enterprise working capital modules. So, for example, if you want to delay that payment, what you can do is insert a capital payables module, and that will allow you to handle that timing difference. It's worth noting that the working capital modules from the main Modano system are incredible. If you use the terms-based approach, it's incredibly accurate. Most people, when they build your working capital schedule, will use the traditional days mechanism. That's a little bit noddy. The terms mechanism that the main Modano content has in it, it's incredibly flexible and accurate. So it's definitely worth checking that out. Intangibles are just a huge parallel stream that kind of reflect the intangibles side of a fixed asset. So again, you've got intangibles capital expenditure, as well as the actual tax and book accounting for those intangible assets, which obviously run through your amortization type calculations. That's really on the kind of asset side of things. Next thing we'll look at is the area that most property people love to hate, which is the debt side of things. So the debt modeling within the property planning content is fairly comprehensive. And the emphasis here is really more on the funding structures. You can look at asset-backed finance, you can look at portfolio effects. It's all those different types and nuances of funding. They've all been handled with the depth of debt modules that we've put together. The debt modules differ by three main areas: the data driver, the asset scale, and the actual mechanism that they use. In terms of the data driver, this is indicated by the debt module's name. So the generically referenced debt modules have multi-purpose drivers, whereas, say, construction and mezzanine debt has development cash flow drivers. Commissioning debt has internal WIP commissioning as its main driver, and senior debt uses the investment acquisition cash flows. So depending on what you're looking to actually fund, the different names of the debt modules will indicate what you should be using. Now, in terms of the asset scale, there's three main types of asset scale. Single tranche, as the name suggests, is just a single standalone tranche. So this is non-category based content. So you can't right click and add more tranches to this module. In order to create multiple single tranches, you're going to have to either mirror or duplicate the module. The portfolio debt modules, what they do is they bring in totals in terms of development cash flows, investment cash flows, and things like that, and then allow you to include multiple instances. So this is category-based portfolio debt. And the reason why we've included this is because it differs slightly from the third type of asset scale, which is the asset debt itself. Now, the asset debt will look at the relevant assets in your model. So, for example, if you have 10 commercial developments and you insert an asset debt module, what the asset debt module will do is look at the number of those developments and actually say, well, that's great. I'm going to scale myself automatically up to have 10 tranches of debt. Now, if you then add in another asset, the asset debt will then say, that's great, I'll add an 11th category. So the asset modules look at the individual underlying assets and scales itself up automatically. So if you run, mezz finance for every single one of your property developments, inserting a mezzanine asset-based module will look at those and automatically create the number of categories that reflect the operational scale of your business. So that's a little bit around the asset scale side of things. In terms of the mechanism, this is all around drawdowns and repayments. So amount, bullet, and the credit foncier are all driven by what we refer to as throughput activity. So that's things like development, commissioning, acquisition costs, actual throughput kind of work. That's compared to, say, the geared modules, which look at a closing balance. So if you're looking to, halfway through a property development, if you want to make a fair value adjustment that the bank then lets you leverage against, you're always looking at the closing value of that development WIP. And that's really what the geared modules are aimed at. They're aimed at looking at your balance sheet and saying, well, okay, my balance sheet has moved in a certain way. I would expect my debt to move in sync with that closing balance item. Now, there is actually a little bit of an interaction between the two. So, for example, construction will use closing development WIP. Senior and commissioning will use closing investment property value. And the generically labeled debt modules will use a combination of your development WIP as well as your actual investment properties. So, the main takeaway with the debt is that it's incredibly comprehensive in terms of how it will interact and allow you to model your funding structure. You can insert obviously multiple different types, mix and match the different types of debt modules. So if you've got asset-backed finance with some degree of portfolio effect, you can model that up as easily as just inserting modules. This area is definitely worth having a bit of a play with to see, and obviously you can insert and delete modules very easily. Definitely worth having a play to understand how those different modules have an impact. The other aspect is if you're looking at funding options, you can insert modules to see very qualitative impacts of different structures to financing. So if you're running an asset-backed structure and you want to look at the potential for a portfolio effect, you can insert that portfolio effect, turn off your asset-backed finance, have a look at the metrics as a result of that portfolio financing, and if you don't like it, very easily just delete the module. So the ability to plug and play different funding structures is incredibly powerful. And that also extends obviously into the equity side of things. So the equity side of things are very similar to the debt, asset-specific portfolio, single tranche equity, the ability to drive these by things like property development and investment activity. So if you understand the debt side of things, then the equity is fairly straightforward to understand as well. Other thing just to note, we've split out the equity and the dividends in the property planning content. So the different dividend modules allow you to really look at different kind of dividend policies. And again, this is an area where you can run fairly complex what-if scenarios based on different types of dividend modules themselves. Now, in terms of the other modules, these are really just for kind of sundry items. It's more of a kind of a completeness exercise as opposed to anything too whiz-bang. A lot of these are very kind of amounts-based modeling. So, what you enter is what you see in the financial statement impacts. But there's still some useful functionality. So it's worth also noting that one of the other balance sheet modules includes an interest aspect. So if you do have any balances that have got charges or liens or things against them, you can model that interest component with that module. So yeah, other modules, nothing too crazy about them, but they do allow you to, if you've got historicals and they do have balances in them that you want to get included into your model, the other modules are very handy for that. Valuation. So we include Modano's Epoch equity and enterprise valuation modules. These are incredibly comprehensive bits of kit. They allow you to enter value and work out return, as well as enter obviously discount rate and ultimately determine value. So if you haven't seen the valuation modules yet, they're definitely worth checking out as well. And again, it's Modano, so it's as simple as inserting from web, choosing an enterprise valuation, and the whole thing literally just gets built straight into your model. And finally, into reporting. So Only thing probably to note from a reporting perspective is we tend to differentiate between dashboards versus kind of loose leaf bar charts. So dashboards, when they're inserted, they are print ready, really comprehensively kind of created. The loose leaf bar charts are more investigative. They get inserted in kind of deep sheet. So if you insert 20 bar charts, they will go down the page. You'll have to manually set up the print settings yourselves. But the benefit of those bar charts is that they really allow you to tell a story. So, if you're modeling a property fund and that fund is a balance sheet story, you will insert a certain set of bar charts that reflect that kind of narrative. So I like the bar charts. They're pretty powerful things. They're also, again, you can insert and delete them. So if you're just trying to understand something very quickly, particularly if you're trying to review a model, I will constantly be inserting these bar charts and then pulling them out. So incredibly powerful things. Now, only other thing to note in terms of the reporting, we often, wherever you see the word top, what that means is we've built in automated category-based work that allows you to summarize into the material items. So for example, if you've got a portfolio of 20 properties and you want to look at only the top 5 of them, if you right-click and set the number of categories to 5, what the logic and the presentation within these modules will do is pretty much just amalgamate the other 15 into an other category and leave you with the top item. So wherever you see the top reference in any Modano content, in fact, that's what that functionality is. So if you open it, it shows you the top 5. Always remember that you can right-click and add another 5 categories to show the top 10. That allows you to kind of get to the heart of materiality and take some of the noise out if you've got a skewed property distribution or something like that. And in terms of the actual dashboards themselves, the Cascade is Epoch. It is a visual waterfall of sources and uses of funds. Personal favorite. Financial statement summary dashboard presents a single year on a monthly basis with annual totals. Only thing I'll probably point out about this is that if you've got a 5-year model, say, you can insert 5 of these modules and set them each to sequential years, select all of those pages, and you can print that out as a pack. And then the other top dashboards, really, they allow you to, again, just get to that materiality question to understand the more significant aspects of your model. One thing to note just from a developer perspective is these modules are incredibly flexible. So if you're adept with linking, you can turn these top dashboards into top anything. So all you've got to do is just change the link in, and these will present an entirely new slab of information. So in terms of refactoring content, these are incredibly powerful. And that's it. So that's just a quick run through the different types of modules we've got within the property planning content. This is the current universe of content, particularly around the dashboards and the reporting. Now that we've got the core engine done, we will be constantly putting up new ratios, new dashboards, new presentations that bolt on. So if you haven't found what you've been looking for, then it's definitely worth checking back later. We also have a huge library, kind of a back catalogue sitting on our server. So if you've got anything you're looking for, then definitely send through a support query, because often we'll have something that we'll be able to ping across to you, and you can literally just insert straight into your model. So that's it. That's the current universe of the property planning modules.